It's time to shift focus to Welspun Living. We've seen a steady revenue growth for this one, but what we were also seeing is perhaps from some challenges with respect to operations, EBITDA specifically. But let's find out about how the quarter's gone by, what we can expect going forward. And we have with us Dipali Goenka. She's the MD and CEO of Welspun Living. Dipali, welcome to the show. Season's greetings to you as well. Let's start with your own assessment of the quarter gone by.
So, quarter two for us is always one of the highest quarters because we ship out for the holiday season for United States of America. And this time, actually, I must tell you that we recorded one of the highest quarters ever, 2,936 crores, which is up 15.5% year on year and 13% quarter on quarter. Yes, EBITDA has been a little soft, though in absolute terms, we have grown by 7% year on year as well. The challenges were because of the geopolitical issues. And let me be very clear here, the Red Sea has been a little bit very, impacting us because it's a long route. And because as I earlier said, we ship out the holiday season. We were completely time bound. We had to hold on inventories in our warehouses. We couldn't get the availability of ships and containers. So that added on to our working capital, as well as, our little impact on even our EBITDA.
My colleague Varsha also is joining us on the show right now. Varsha.
Hi Dipali, happy Diwali to you and your family.
Happy Diwali to you, Varsha.
Thank you. Well, Dipali, you guided for a capital capex of around 800 to 850 crore. Now, what are the timelines for this? Are you on track? And what will be the debt situation after this capex?
So now let me tell you. We invested around 341 crores last year on jacquard and fashion towels, which actually is now in completion in the next 2 months. So that is there. And when we talked of the capex of around 705 crores, and if I include the last year's capex, it's around 1,050. We are actually looking at around 100,000 meters of bedding processing, along with the cut and sew. When we talk about towels, we are actually integrating backwards in the terms of setting up 24 looms and, of course, spinning of Corsa yarn. That will completely make us integrated and actually help us not only to integrate our facilities, turnaround times will be better, quality will be better, and and really react faster to our customer needs as well. Now, having said that, the other question that you will come to would be about your ROCE and how are you looking at that? So we are actually going to be investing further in the next 2 years. And that will and we're going to maintain our ROCE. And if you look at our ROCE today as well, our quarter two annualized ROCE has been around 15.5%, and we'll continue to maintain that as well. So that's where it is. And having said that, India is an integral part of the supply chain strategy for all our global retailers, whether it's United States of America, UK, Europe, and rest of the world. And that actually has also been a very important aspect of this, strategy, where actually this time the OTEXA data shows that, towel has actually, India's share has increased to 40%. In our bed sheets, it's increased to 63%. And that actually shows that India is really going to be a sweet spot and under consideration, even for the supply chain for all our retailers.
Okay. And what about the debt situation after the capex that you have been targeting?
So today we are at around a slightly higher 1,800 vis-a-vis what we were in 1,500 crores in the net debt, which actually again was owing to the the working capital. But let me just tell you that while this is there, we will, we have committed zero net debt by around 27, 28, or we'll be closer to around 200 crores. And that's where we'll maintain where we are going to be.
All right. Dipali, any changes in your guidance? I understand that you are looking at about a 10 to 12% growth in your top line. Margins at around 15 to 15.5%. Of course, notwithstanding the current challenges that you do see with respect to supply, how are you looking at any changes here?
No, we will maintain a guidance of around 10 to 12% in the terms of a top line and 15 to 15.5% in EBITDA. Let me also just say that our strategy remains intact, and see, the geopolitical issues will continue. And I mean, I would always say that looking at Welspun Living, I mean, looking at our complete consistent performance, I think our strategy remains intact. Our story of the market share globally remains intact. Our story of India with our growth here remains completely intact. So we are completely on that path of one quarter here and there. But yes, I mean, that's where, it is.
And Dipali, will this, the capex that you have been targeting, will this be sufficient to achieve your long-term target of 15,000 crore in next 2 years along with your expected EBITDA margin?
Yes, because if I look at our investment today, will contribute around 1,000 crores to our top line, and we are looking at 15,000 crores by 2027, and that remains completely intact.
All right. And how are advanced textiles and domestic retail sectors performing in terms of growth? If you could give us an idea about the sector in general, the entire industry.
So when I talk about advanced textiles, we've actually grown by 18% here. And I think in advanced textiles, innovation and sustainability run very, very strong in spunless and needle punch. So we have seen that kind of an opportunity. And for us here at Welspun, I think the important aspect has been to spend more time on innovation and create those kind of products that contribute to that kind, and takes the market share, and as well as a kind of a healthy EBITDA as well here. So that's where advanced textile is. When I talk about India, the domestic market, which actually was at around 5,000 to 6,000 crores, our addressable market in 2022, is expected to be around 80,000 crores by 2026. Look at that kind of a whopping jump that we're looking at, the India consumption story. And we see that as a very big opportunity for us. Having said that, this quarter, we have done around 159 crores as a growth of 10%. It has been a little muted. But I think the story of India and consumption remains intact, and we will see that, growing forward.
Also, Dipali, if you see the growth in flooring business, I know it doesn't contribute much to your business, but it has been muted. Now, when do you expect this to be rebound, and can we anticipate double-digit growth, number one? And number two, where you want to take this contribution to maybe in, say, next 2 years?
So see, flooring actually has a great opportunity. And hence, I mean, we set up this plant, the most modern plant this part of the world, where now we are 80% indigenized in the terms of supply chain as well. This quarter has been a little soft because, again, owing to the whole Red Sea issue, because, these basically shipments are DDP and CIF. I mean, that means that, our customers and retailers have pushed out their, needs and their orders for the next quarter, looking at the kind of the prices that, the containers, where it went up to 2x, right? Now, the opportunity there continues to grow. Taking on the marquee clients, the OEMs in America, Australia, and New Zealand. But India has grown by 28% this quarter. And we will see the double-digit growth in India as well, as we see the home segment growing. And we can truly say that Welspun Living is a complete home solution company, from bath linen to bed linen to utility bedding to rugs, carpets, and flooring. So yes, that's what it is. We feel very, very, gung-ho about this.
Okay, Dipali, we leave it at that. Thank you so much for joining us and taking us through your views, and of course, giving us an idea about what we can expect from the company going forward. We wish you the best.